Hi, welcome to the Market Alert for Monday the 10th of June 2017. So yesterday, Friday's activity, we saw the pound move lower. The market traded through the scalp on high volume, and it was worth waiting to see if the market would attempt to move down to the 129 level. So we'll just move forward. You can see here I was already taken some sort of contingency here just in case the market came back. Marked up 50% there. Didn't need to. You could have just removed the stop and then moved to break even first, just to give it a bit more to breathe. But it was a bit of support in this area here, but then eventually the market broke back below the scalp and then continued lower, trading down to the 129 area. But was it going to be any weaker? Well, you can see there, just moving the stop, the market breaks, and then we get another sell signal coming into the market here with the entry scalp and stop loss, and then again just moving the stop down there. You can see as it takes a long time in the 15-minute chart, and then eventually the market comes back and stops the trade out for 37 points by the time it got around to actually exiting the market there. And then prices just traded sideways, and they went down again, and then we're waiting for the non-farm payroll figures, and that's what that blip is there. But we'll move on to the Dow. Too far. Slow down Keith. Right, so this is the non-farm payrolls, and of course, as I said in yesterday's Market Alert, or Friday's, depending when you're watching this, that if the figures came out above the 200,000, oops, let's just go back to that, then we would see prices move back to the upside, and the one I'm after is this one. Here you can see that the June payroll rise beat expectations. As I said, then that's going to be bullish for the market, and sure enough we see that is precisely the case there, with the market moving higher just after the release of the figures. We had a sell signal. Now, I did warn yesterday if the figures came out in the 200s that it would be bullish for the market. So we get a sell signal, and I'd already warned that if we had 200,000 plus on the payroll figures, then the market was likely to move higher. So this is why you see this being filled and then failing, and then the buy signal taking over, and then we might as well just go all the way through this as the market then traded higher for the remainder of the trading session. And then in the evening again you might get some profit taking, but it's not worth it late on Friday evening after all of the work has been done at this point here with the non-farm payroll figures being released. And speaking of news, let's have a look at the news out on Monday. Well, actually, there's no news out on Monday. Absolutely diddly squat. Nothing at all for Monday, so expect the market to be sideways. And unless something comes out of the G20, which is going on today, that's Saturday, you'll see there's oh, that's already concluded anyway, so not a lot going on there. Quick look at the implied volatility before concluding then. So surprise, surprise, implied volatility back through the 9% area and down to 821, and that's because obviously the underlying market's moved back to the upside. Right, that will do it for this week. See what happens at the start Monday. Again, keep in mind there's no news, and the market could be fairly quiet. So that's it for this one. As ever, thanks for watching. See you in the next one.